Welcome to the HAYVN Hubcast, a place to learn what business leaders, owners, and professionals are doing to navigate and grow in today's market. Hear from industry experts on everything from marketing, leadership, financing, and more. Brought to you by HAYVN, a co-working space where you can connect, create, and get stuff done.
Hello, and welcome to another episode of the HAYVN Hubcast. I'm your host, Nancy Sheed, and today I am really excited to be talking with Marty Isaac. Marty is the President Managing Director of the Angel Investor Forum. And for those of you who aren't familiar with that, it's Connecticut's leading angel investor organization. Welcome, Marty.
Hi, Nancy. Thanks for having me today.
Before we hit record, we were sort of like diving in. So I was like, Marty, we got to turn record on so we can get all this good stuff. So thanks for being here today. Before we dive into exactly what you're doing now with the Angel Investor Forum, can you sort of give a little background in terms of what brought you here? Was young Marty a finance whiz who couldn't wait to be an investor, or was it a circuitous route that brought you here, or somebody at school said?
It was a bit of a circuitous route. I came out of Wharton undergrad, like 30 years or so ago, and I moved to Connecticut to work with General Electric, which, if you think of the glory days of 1985, was really the greatest company on the planet at that point in time. And it was a great place to learn. So I was with GE for around 4 years, 2 years in corporate in a consulting group. And they told me at that time, what are you doing here? You're 22 years old, get a job. Don't be a consultant, go out and do something. So like every other good GE soldier, I went to the plastics division and was selling engineering thermoplastics in Ohio for a couple of years. And I woke up one day and realized I don't really want to sell engineering thermoplastics. And I joined a consumer marketing services company back in Connecticut. I was there for 10 years selling subscription services. And then I moved to another company selling subscription services. So I became an expert in subscription services. As it turned out,
I have to hold. This is pre-digital subscriptions?
It was offline. And then we did integrate that online. And it turned out that experience base was ideal for angel investing because the whole world turned into subscriptions and SaaS. And I just have a good eye and really understand the numbers associated with that. So that gave me a bit of a head start.
Huge.
As I was moving into angel investing. So I did those jobs, and then I semi-retired around 15 years ago and kind of accidentally got into angel investing.
So this isn't your trajectory of like, I'm a finance guy, and now I've moved over into my own finance situation, which is fascinating, back to your circuitous route. So in terms of your, then let's say, origin story with angel investing, did somebody just sort of come along and say, okay, here's a company, you should invest in it? Or how did that curiosity peak as you were learning about SaaS?
It was really a friend that was starting a company, and I had other friends that were order of magnitudes more affluent than I were that were investing in the company, and I had an opportunity to participate, and I didn't know any better, and I did participate. I mean, I wanted to participate, but not at the level I did. But so I put in too much money. It ended up the company did fine. I got a double out of it. And I said, wow, this is kind of fun investing, but I can't invest this type of money. And so I began to read up on, can I be an angel investor if I'm moderately affluent? Like, how does this work? And it turned out, yes, there was a great opportunity to do that. And as I began to learn a little bit more and explore, I wanted to get on more cap tables because, as I mentioned, I was very lucky to be involved with some companies that did remarkably well. And the equity was terrific, and that I'm grateful for that. But I really didn't want to work 80-hour weeks, and I didn't want to take a risk of joining one company or two companies and get lucky on cap tables. I decided I'd rather invest and get on a lot of cap tables rather than just one or two.
And Marty, before we go any further, for those people who aren't familiar with sort of the investing, can you explain the olden days of angel investing were like, these people have so much money that they are true angels and they're putting money into my company. And if I totally fail, it's okay because they can afford to lose this money. Can you kind of explain how we've changed from that and what it means to be in a cap table, either as the investor or, again, as an education for people who might be thinking about raising money in their own company? I know it's common lingo for you, but for those on the outer world.
Thank you. I'm sorry about that. I think a long time ago, people are familiar with VCs and venture capital. And when companies got large enough, but they weren't public, these venture capital companies would invest, but they were, further along. They were going concerns. And the question is, how do you get to that level where you became interest to a venture capital company?
Right.
And for a long time, this early starting phase was tremendously difficult because they have what they call a friends and family area. But if you didn't
Right.
have friends and family that were going to put in $500,000 to your business, how exactly was this supposed to work?
Right.
And there were groups, few and far between 20 years ago. There were
Right.
a group up in Boston. There was something out in California where there were groups that were beginning to sponsor entrepreneurs. And they did remarkably well with some early stage stuff. And it began to catch on. There are now 250 angel groups plus across the country investing
Mm.
in early stage companies. And when I talk about the cap table, what I'm saying is I'm investing in a company and owning a share of that company. So we are owning stock in that company or another mechanism that will turn into stock.
Right.
And if the company succeeds, we succeed. And if the company fails, you lose all your money.
And you're not this, for a matter of perspective, though, when you say cap table and you own shares, there are more players than a handful, typically. Is that also sort of what differentiates you or not necessarily?
Well, I think, what, yeah, there's going to be 10, 20 on the cap table. It's not 150 people on the cap table.
Right.
There could be funds that may take one slot on that cap table. There could be
Right.
individuals that are investing, but it's not going to be this huge phone book of folks that are participating. It's a smaller group that are participating. It could be a fund, it could be an individual that's buying stock in this private company. And I should say, it's tremendous risk when you're investing in these early stage companies. The Angel Capital Association says that 50% of these are going to go to zero.
Right.
And another 20%, you won't get your money back. So it's kind of a crazy thing. Imagine investing in the stock market thinking, well, half the companies I pick will go to zero, another 20% I won't get my money back. Then why do you do it? You do it because they have this thing called the power law, and there's a small percentage of companies that are going to give inordinate returns. I like to
Mm.
think of it this way, that the most I bet a chip on a company. The most I can lose is one chip. And I've had situations where the company did extraordinarily well and I won 80 chips. So,
Right.
you don't need to win that many of 80 chips to make it be an effective way to make money, but it's challenging.
Yes. And I think for those maybe of us, as I'm raising my hand, which nobody can see, who have done it once, it was kind of like, I'm a big believer in this product and company, and I want to be in the friends and family, but I also know there is a great chance that I will not see this $10,000 again that that was a part of a share. But I love how you are approaching it from, as you said, not necessarily from the risk standpoint, but as much as a strategy standpoint. And it's now just not an opportunity for elite investors.
Not at all. But what the key I would say is you do need to be diversified in your approach. So if you want to be an angel investor, I highly recommend over some period of time, maybe 5 years, you're going to move into 20 investments. Or you're going to join a fund that's going to get into a lot of investments because it's so risky. You need to give yourself an opportunity to get an outlier because you could win if you only invest in one or two companies, but the odds are you're going to lose. But if you invest in 20 or more companies over a period of time, you radically increase the probability of success.
And in addition to the diversification, Marty, can you speak also to, again, what it takes to be accredited? There's a sort of the accreditation of an angel investor versus, is there still accreditation if you're going through a fund that's accredited? I'm just sort of, again, thinking of the layperson who's like, this is interesting. Where do I stand in this? How do I do this?
No, that's a great question. And it's kind of crazy, actually, too. The government says, if you're going to invest in these private companies, we're afraid you're going to lose your money. So therefore, I want you to be a sophisticated investor. And their mark of a sophisticated investor is really a mark of affluence. The easiest way to be an accredited investor is you have a combined household income of 200,000 or more per year for the past 3 years, or you have $1 million in assets excluding your home, or you've taken one of those finance exams, Series 6, Series 7, I don't remember exactly which one it is, But it's kind of a crazy way of thinking about it. We let people go to Las Vegas and they can gamble whatever they want. We let
Mm-hmm.
people buy Bitcoin, they can do what they want. We let people be engineers at Uber and build some of these incredible companies that become trillion-dollar companies. Yet that engineer, if they're not accredited, could not invest in Uber. So that's the rules today. There are some,
Still.
those are still the rules. The exception for it is there are some crowdfunding platforms that have certain other disclosures that enable lay people to invest. And listen, it is important. You don't want people to invest and lose their money if they're not receiving correct information. But there's a balance in
Right.
terms of what somebody's risk profile is and what they'd like to
Right.
do. So I hope they loosen those restrictions and enable more people to participate in the asset class.
And even if you're participating in an angel fund, do you still have to be accredited, or does the angel fund have its own accreditation? You still have to be accredited.
Both things are true. You must be
Oh,
accredited for that angel fund because the angel fund, as they're investing, is also affirming that all my investors are accredited.
got it. Got it. You've talked about how things have changed over the past 20, 30 years in terms of kind of these were things that a few people in a few major cities or a few major parts of the country were doing this. As the Angel Investor Forum in Connecticut, you're sort of seeing it from a state perspective. What's different when you're looking at it from the state level, or are you only allowed to look at companies in Connecticut, or it's more you're just sort of this is just a way of sort of keeping it regional and helping people? Like, are you
The
limited in terms
investors
of
are
your
from
scope?
Connecticut. So I'd say 99% of our investors are from Connecticut, 95%. We have a handful of New York investors. We are looking for great companies across the country. We've done some
Mm,
international investments as well. We want to find the great companies in Connecticut and invest with them. Connecticut is a wonderful ecosystem. And Connecticut has created some, additional investment incentives. We have an angel investor tax credit, for example. So an early
right.
stage company can qualify for this angel investor tax credit and encouraging investors. I just said how risky it was. 50% are going to go to zero, 20% you don't get your money back. A little incentive to get you to invest is helpful
Mm,
and important because people might not take the risk without it. But Connecticut has an incentive program in place where you would get 25 cents of every dollar back if you invest in a qualified Connecticut company. So that's very important. And Connecticut companies need to go and try to qualify for that. But the world has changed radically over the last 15 years. When I was in a startup company, it was a 10-page PowerPoint presentation along with the quality of management, and VCs were giving us $2 million at a 10 million pre-money valuation for the concept of the company we were going to build. I mean, in today's world, you just would get laughed out of the room.
and fascinating that nobody got laughed out of the room back then. It
But
was totally fine.
it was expensive to start a company back then. You had to build everything from scratch. It's not that you could take all these different systems, and it keeps getting lower and lower and lower cost to create a company in today's world. And
Mm,
AI is enabling that
great
even
point.
more so. There are going to be these one-person companies that are going to be thriving that you can create companies for a very much lower price than it was years and years ago. But at the same time, that means we're expecting when we're looking at companies, we're not investing in ideas. We're investing in companies that are proven. They're in marketplace. There's some proof that somebody cares about the product that you're building,
Even in this early stage,
even
right?
at
Like
this
even in
early
this early,
stage.
it's like you could have gotten your prototype made, no problem, on your credit card. So
I
you're
am
not here
looking
getting
for
money.
proof points to de-risk what we're building. And so when we see companies out there, where I've made my mistakes as an angel investor is investing in a hypothesis that sounds really interesting to me, but the risk rate of that or the failure rate of that is just so high that I'd rather pay at a higher valuation when the company is a little further along, still early stage, but it's a little further that there's some proof that somebody out there cares about what's being built, that they want to buy it. And I believe you can get customers for it, and I believe it's valuable. I'd rather wait a little bit longer than just invest in an idea.
Marty, I have a couple questions in terms of what impacts your decisions or what's impacting sort of what's going on in the world, right? So there's kind of two. There's the macro in terms of policies, economies, globalization, et cetera, right? So we've got that. And then on the other side, there's also kind of the human experience, preferential, et cetera, like certain industries. the world could be your oyster. How do you do it? Or how do you see people successfully sort of picking lanes or understanding all these moving parts?
I'm a generalist. And so I invest across every industry, and I kind of simplify things down to really a handful of things that I'm looking at. And then I'll expand upon each one. But at the end of the day, what it really comes down to, what's the problem? What's your solution? And how do you make money? I mean, it's kind of as simple as that. And then as you begin to get into it, it's really trying to understand, well, okay, how are you going to acquire customers? I like businesses that have really unique distribution strategies. If you're just buying keywords on Google or Facebook, well, like everybody else, not really differentiated distribution strategy. If you have some other clever way of acquiring customers, that's interesting to me. But how much does it cost to acquire that customer? And how much value do you get from that customer?
Right.
And do I believe you can buy a lot of these customers? Is it big enough? At this early stage, there are kind of some things to just say, it's kind of table stakes. If everything went right, is it big enough? Is it really solving an important problem? Those are kind of table stakes. The key, as we're beginning to really circle in on, are we going to make an investment, is why is this management team the right team to get it done? Do I believe this team can get it done? It's the most important factor and really the hardest thing to size out. So, I'm getting older. I've been around the block. I use a lot of my experience to determine, do I think this is the right team or not?
Right.
And you look for green flags, you look for red flags. But it is the most important thing. But I think back to my career, and I've hired so many people over time. And I would think my batting average, and where I spent a lot of time hiring people, probably 70% good, right? And you end up firing a bunch of people, or some people didn't work out. You thought they were great and they turned out to be mediocre after all. It's not so easy to size up talent, but it's the most important factor. And where I see people kind of confirmation bias of, they get through something and say, well, these guys are fantastic. But it's kind of like watching a football team. And on Thursday, you have to say how good the quarterback is. And then on Monday, you found out how good they really were.
Right.
It's much more helpful if you know on Thursday.
Right. Right. That's exactly very, very true. Well, I appreciate you bringing in, again, the personalization part of this, especially as we're all running for the hills for technology and our world's going to be taken over. And I just sort of keep being excited about that. It's still coming down to the people, right? Whether how they function, what they're capable of, how intelligent they are, or what their own resources or connections are. So I feel like that's a key part, even as you said, we move technology.
But, the piece I would add to it. So once you're defining the people, and then you're trying to figure out, well, do I want to make this investment or not? And then it's kind of the value. How much are you valuing the company for? And that's traded against kind of the risk reduction I see, which I'd say the best is traction. What are your sales?
Right.
And the more you can risk reduce this investment for me, the higher your valuation is going to be. It's too early on all these companies to do any math to determine a valuation. There's no discounted cash flows. There's no formal mechanics to define what the value of a company is. It's a giant game of comparison. I'm looking at hundreds of companies per year. I'm going to make 10 bets per year. And I'm trying to figure out, where am I going to place my bets? And I'm comparing your company to all my other options. And I'm comparing all these things. So if you value your company at $15 million and another company is valuing their company at $8 million and they have twice the sales as you do, guess what? I'm going to go into that other company, even though I think you might be an interesting company. That's a better probability of me getting a strong return.
I love that you explain what your system is for valuing and deciding, because I think if you're a potential startup who's seeking founders, they've just heard from you firsthand, this is what you need to show me. On the other side of the coin, if people are interested in learning more about being an angel investor, obviously you have your model and you've got your experience. How can people sort of take the next step? What do you advise for people who are new into this or have heard about it and kind of want to either get started or learn more?
Join us. Honestly, we are, we're a group of 100. You did. We're a group of 120 members in Connecticut. The thing that I like about angel investing is there are no sharp elbows. So even the highly affluent in a formal angel environment are investing 25, 50,000. These founders are trying to raise $1 million and $1.5 million. There's room for everybody. I have people in the room that have never invested before. I have people in the room that are experienced angels. And we like to bring people up and help them to understand how it all works. So there's plenty of online to learn, and there's great books out there to begin to teach you the ropes. It's not all that complicated. It takes time. It takes
Right.
time to begin to learn some of this. You need to be curious, and you need to have the time to explore. You need to have the time to do diligence. If you do diligence, as opposed to just put your chip on a company and you don't make quote unquote silly mistakes, you radically increase your returns.
Mm.
And so that's a part of it. But we like bringing newbies into us and help them get up to speed. But for me, it's a tremendous amount of fun.
Well, I love the fun and the no sharp elbows, being curious, and you don't have to be in one lane to join you. So the whole reason we're talking, Marty, is you've, I think, been to several HAYVN events, but you recently were a judge at the HAYVN Hatch.
Yeah.
Thank you for doing that. And how's the HAYVN Hatch different from other pitch events that you've been to?
It's women focused, which I love. For some reason, even in today's world, there's a ridiculous shortfall of investment going to women founders.
Mm-hmm.
And there's a lot of room to get done there. So I love going to these events because you have the opportunity to see really tremendous talent that may not be coming through traditional funnels. And I love the opportunity to have an opportunity to invest in companies that others aren't seeing. So I always enjoy that.
Nice.
We were there this past week. I was judging, and there was the company that came in first. Their name, I believe it was Crenell. And it's a very cool company that is creating a condensed cranberry cocktail to prevent UTI infections of all things.
Nice.
Bright founders, important problem being solved. I don't know. They won the competition, and I personally am interested in learning more about the company. But I think that happens at many of these competitions. I come into contact with companies I never heard of before with really great ideas for solving important problems. And I love getting to explore it. Whether I invest in it, I don't know, but it seems like a great idea, an important problem being solved. So it's definitely up my alley to learn more.
Well, hopefully I'll also get to interview them. So that's one of the perks of being a HAYVN Hatch winner is you get to be on the HAYVN Hubcast. So I look forward to talking to them. Marty, thanks so much for your time. I really appreciate you being here. And if people want to connect with you or learn more about the Angel Investor Forum, what's the best way to do that?
Yeah, they should just reach out to Marty Isaac at Gmail, MartyIsaac at Gmail, or go to our website, angelinvestorforum.com. And if founders are interested, they can apply right online to our screening team.
Oh, awesome. I will put all those in the show notes. Marty, thank you again for your time. Love this sort of insight into your world and appreciate you being here.
My pleasure.
That's another episode of the HAYVN Hubcast. Thanks for being here. If you like what you hear, please give us a like. Make sure you're following or subscribed on your favorite platform and share this podcast with somebody you think will appreciate it.
Thanks for listening to the HAYVN Hubcast, a place to learn what business leaders and owners are doing to navigate and grow in today's market. Please leave a review on Apple Podcasts and subscribe on your favorite podcast app. HAYVN is a co-working space and virtual community located in the heart of Fairfield County, Connecticut. HAYVN is a hub for business owners and professionals to connect, create, and get stuff done. Find out more about the HAYVN community online at hayvn.com. That's HAYVN.com. HAYVN Hubcast is produced by Sound Advice Strategies.